Hi everybody, this is Tom Willard. It is Wednesday, February 23rd, and based on a lot of feedback I've received from quite a few of you on my videos and some of my material, I've heard that there's some folks that really want to know more basics, and I know that there's a lot of you out there that have jobs and have occupations, and you're looking to make a side income from trading, swing trading, not day trading. So buying stuff and holding it over the longer term, weeks, months, and even years in some cases. And so what I thought I'd do is a series of videos that are very basic, that teach you the basics behind technical analysis and some candlestick stuff, and just kind of really get you up to speed. Now, a lot of this stuff, you can pay thousands of dollars to learn at seminars, and I'm going to do it here for free for you. So anyway, today's subject will be technical analysis versus fundamental analysis, a very quick 1-minute discussion on that, and then I'm going to go into a basic candlestick lesson here. So if you're brand new to trading, this is the good video for you to watch. Okay, first off, in trading stocks and any other financial instrument, there's really two main schools. Now, there's a number of other ways that people can do this, but the two primary schools are technical analysis and fundamental analysis. And in a very nutshell, one-sentence definition, fundamental analysis is really using the fundamentals, the financials of the company. Looking at things that may be pretty subjective in some cases, as earnings, projections, management capability, financial reports, and that stuff, which is more concrete. And using all that information about the fundamentals of the company and the business and what business they're in and what they provide, and using that to make investment decisions. And in a nutshell, technical analysis is using the charts of where the stock has been, where it's traded in the world with regards to price and volume, and using that information for making your decisions based on what you buy and sell and short and that sort of thing. And I am a 99% technical analyst. And the reason behind it is this. Why technical analysis over fundamental? Well, to me it's pretty simple. Fundamental analysis is based on a lot of subjective things, and when you're a precision trader like myself, especially on the day trading side, you need to have some technical basis to your trading, which is where the stock is showing supply and demand. Now, swing trading, you can definitely get a little bit more soft on the subjective stuff, and since most of you that are learning this, let's start with there, because that I think pertains to more of the audience. Day trading is only for a few that have the time to day trade, and of course swing trading and investing should be for everybody. I mean, everyone out there that has extra money, I think instead of putting it in a bank, you should learn how to invest your money in the stock market. Create that other stream of income that so many people talk about, and that really can help you get to financial wealth. Okay, so technical analysis is key, because technical analysis shows you exactly where the stock has been price-wise, and the volume there that encountered the exchange between buyers and sellers. And so if you look at it this way, technical analysis is all-encompassing in that everyone who trades a stock, that's people that use fundamental analysis, there's people that use their horoscope, that use wave charts, that use every single method out there, is shown in a technical analysis chart. So people with inside information, people without inside information, everyone who's trading the stock is there. So and when someone buys or sells stock, they can't hide from the charts. So you're getting the truth up to that point in time of where that stock has been, and I find that is the best way to make a decision about where the stock or investment vehicle, could be currencies, could be commodities, where the odds are that will go next based on where it's been. It is not a crystal ball. It is not 100% right. And it's not something that you can say for sure, and that's the psychology element, which is huge. And if you are interested in the psychology piece, I know a lot of you have already been to my blog, but go to my written blog and you can get that off my website. The address for that, www.tomwillardtrading.com. So let's talk about candlesticks here really well. Now that we've talked about technical analysis versus fundamental analysis, and really simply, I'm going to bring my cursor up here. These are candlesticks. And a candlestick basically is just a representation of what a stock did in that time frame. So in this particular chart, it's a daily chart. So each candlestick represents the trading for one day. Okay. So for example, using my arrow here on this green chart, on this green candle that I'm on right now, this particular stock, which is actually the Power Shares QQQQ ETF, okay, is representative of the NASDAQ, and it opened up here at this bottom line of the candle. Okay, it closed at this top line. Now, how do I know that? Because the candle is green. So if you've got a green candle, the stock or the vehicle opened at the bottom where that horizontal line is and closed at the very top. Now this top, you'll see a tiny little tail there, you'll see it there, and you'll see it there. Okay, those are the range. That's the range today. So at some point this stock went as low as the bottom of that tail, and it went as high as the top of that tail, and it settled in there. So that is the candlestick. Okay, continuing, the next candlestick here, you've got it open. You can see that it opened slightly above here, this one. It went as low as the bottom of this tail, went as high as the top of this tail, and settled in right here at this top horizontal line. So for that day, that was the trading. Now this next day was quite interesting because it gapped up again, you'll see up here, and it traded as high as the top of that tail, which is very little bit, just a sniff above that open, and it went as far down as the bottom of this tail. Okay, and it closed here. Now how do I know it closed here, and how do I know it opened here? Because it's a red candle. Red candle means that the close is below the open. A green candle means the close is above the open, and it's pretty much simple. That's simply how it does, how it works, and this works on any time frame. So we're looking at a daily chart. Okay, now if I were to pull over a 15-minute chart, let's do this. You'll see for each bar represents 15 minutes, and you'll see the same type of situation here of what the stock did for each 15-minute bar. And so that's a basic lesson in candlesticks there. And so everything I do is based off candlestick analysis because it's visually very easy to see where the stock is going. You can see here, looking forward here, we've had a pretty good pullback here, and you'll notice that this was a pretty big red bar where we opened here, we closed here on big volume. These are the volume bars down here too. Okay, so that's a basic lesson. I'll talk more and dive into more of the basics around reading candlesticks, and maybe eventually get to some basic patterns on what to look for to trade and make money in the stock market, or in the currencies market, or in the commodities, or in whatever you choose to do. Thank you very much, and again, if you have any questions, shoot me an email, tom@tomwillardtrading.com. Have a great week.